I'm Erik Peterson, proven realty broker by eXp, and this is your current market update. As we head into October, the market has slowed down consistently over the last month and a half as the Fed continues to raise interest rates, and now they're at 22-year highs. Mortgages on 30-year fixed are in that 7 to 7.5% range, depending on your credit. That has caused a lot of people to pump the brakes and decide moving forward, where is this market going to go and should they be buying? So that's a great opportunity for buyers right now. So if you or anybody you know is looking to buy, now is the time to lock in at some incredible prices on some good inventory. Lock it in before interest rates go back up. We expect interest rates to be up again a month from now as the Fed is starting to say that they're going to slow down with their interest rate hikes. But right now, if you're taking a look at the inflation, because oil has crossed $90 a barrel, that's putting additional pressure on prices, shooting up inflation, and they have said that they're going to do whatever it takes to give us a quote-unquote soft landing. So what does that mean for you? We really believe that interest rates are going to continue to march up. We might be looking at 8%. So if you or anybody you know are looking to get in, now is the time to lock in. You can always refinance when rates go down. We're projecting that rates will start dropping next year. Why? Because of an election year, right? 2024 will be a very critical election year. Make sure to remember that when you're voting. Our economy is in a tailspin in most areas, but we in the Bakken, just like 2009, 10, 11, and 12 are one of the few bright spots economically, which should help bring more people to the market, and it will continue to be a game of musical chairs. What do you do if you're a seller? Right now, aggressive price cuts on the inventory that hasn't been moving, especially on the industrial side, as we're seeing a little bit of weakness there because companies cannot get financed at the same levels that they were able to before. Banks are now at 8.5% to 9% on commercial and industrial loans, and instead of a 30-year time frame, they're only giving us 20 years of amortization. So payments have gone up 30% down, and this market is pretty scary for some individuals and companies to release their money. So in the 14 years that I've been out here, right now there is more available inventory on the outskirts of Williston into that Watford City area on the industrial side than I've seen. So if you are an oil field company looking to lock in, there's plenty of inventory out there. If you're a seller, hold on. We expect that interest rates are going to continue to rise, as we mentioned earlier, and pricing pressure is going to go down on some of those assets. What does it look like if you're an owner looking to lease? Not a lot of inventory out there, plenty of companies right now looking. As we head into October, as it gets colder and colder, as the nights get shorter and shorter, people are going to start wanting to get all of their equipment inside. The good news is we've been getting a lot of calls recently from other larger companies coming to market that may not have been here, and the North Dakota oil sector is not the only one looking for those. Crypto companies, storage companies, data collection companies, and online retailers are all looking for space in our market. So good news if you're an owner. What about investors? What should you be looking for? Obviously, higher rates have decreased the amount of net returns that you can have because of the higher financing costs, but there's still very attractive investment opportunities out there. We're still seeing 8 to 10% caps, which is unheard of across the country. And many of you have been asking us, what is the fallout from a lot of these big commercial and office buildings in the rest of the country going to mean for our markets? We're in good shape. As these buildings have their short-term interest rates, 3, 4, 5-year adjustable rate mortgages, as those expire, a lot of these loans are on a non-recourse basis, which means companies can just walk away from them, which they are, because there's major vacancy in these big office markets. We really believe that a lot of the money that was chasing those assets are going to be heading to North Dakota, looking to lock in real estate in a high growth area, especially with interest rates still down comparatively over a 30-year period. And as we're starting to see oil prices push above 90, many of the experts are saying we're going to see oil in that $100 range. So what should you do? You should call us. We're here. We've done over 600 deals in the market. We've done 73 million last year and 55 million to date this year. We're not slowing down. We're working hard. We're grinding away, and we're here to help serve you. Please give us a call at one of the numbers below if you have any questions or how we can help you.